In the early 1700s, Britain was a nation on the rise. The streets of London and other major cities buzzed with activity, reflecting the country's growing influence and prosperity. The air was thick with the scent of progress, as new buildings sprang up and the population swelled with people seeking their fortunes. The British Empire was expanding, and with it came a sense of optimism and ambition that permeated every aspect of society. Victories in war and expanding trade fueled a desire for new opportunities and wealth. The British military had secured significant victories, bolstering national pride and confidence. Trade ships filled the harbours, bringing in goods from distant lands and creating bustling markets where merchants and traders thrived. The success in both military and trade endeavours created a fertile ground for new ventures and investments, as people sought to capitalise on the nation's upward trajectory. Against this backdrop, the South Sea Company was born in 1711. It was established with grand ambitions, aiming to become a dominant force in global trade. The company's founding document laid out a vision of prosperity and expansion, capturing the imagination of those who read it. The early 1700s were a time of great opportunity, and the South Sea Company positioned itself as a key player in the unfolding drama of economic growth. This company was granted a monopoly by the British government to trade with the lucrative markets of South America. The monopoly was a significant advantage, giving the South Sea Company exclusive rights to trade in a region rich with resources and potential. The historical documents granting this monopoly were seen as a seal of approval from the highest levels of government, further enhancing the company's credibility and appeal to investors. The potential riches of this new world fueled the imaginations of investors. Meetings were held in grand halls where the possibilities of South American trade were discussed with great enthusiasm. The ports were abuzz with activity as ships prepared to embark on journeys that promised untold wealth. The markets of South America were depicted as treasure troves, filled with exotic goods that could bring immense profits to those who dared to invest. The South Sea Company promised investors a share of the treasures from across the ocean. Stock certificates were issued, each one representing a piece of the company's grand vision. The promise of wealth was not just a distant dream, it was something tangible that investors could hold in their hands. The allure of these certificates was powerful, drawing in people from all walks of life who were eager to be part of this exciting venture. Spices, silks, and gold were just some of the exotic goods that filled their ambitious plans. The company painted vivid pictures of the riches that awaited in South America. Spices that could transform the blandest of meals, silks that could adorn the finest of garments, and gold that could fill the coffers of the wealthiest investors. These goods were not just commodities. They were symbols of the prosperity and luxury that the South Sea Company promised to deliver. The company's prospects seemed limitless, and the public eagerly bought into the dream. The stock market was a hive of activity, with people clamoring to buy shares in the South Sea Company. Public excitement reached fever pitch as stories of potential riches spread like wildfire. Investors from all corners of Britain, from the bustling cities to the quiet countryside, were drawn to the promise of wealth and success. But this thirst for wealth would soon prove to be a dangerous temptation. Greed began to take hold, blinding investors to the risks involved. The pursuit of riches became an obsession, leading people to invest more than they could afford. Historical cautionary tales of wealth and ruin were ignored as the promise of easy money overshadowed common sense and prudence. The South Sea Company's early success in securing trade agreements and its close ties to the government fueled its image as a sound investment. The company's connections to influential figures in the government were seen as a guarantee of its stability and potential for success. Trade agreements were celebrated as milestones, each one adding to the company's growing reputation. Investors felt reassured by these achievements, believing that their money was in safe hands. People from all walks of life, from wealthy merchants to humble shopkeepers, were eager to own a piece of this seemingly guaranteed path to riches. The allure of the South Sea Company transcended social and economic boundaries. Wealthy merchants saw it as an opportunity to expand their fortunes, while humble shopkeepers viewed it as a chance to improve their lot in life. The stock market became a melting pot of investors, united by their shared desire for wealth and success. Little did they know, this excitement would lead to a financial frenzy unlike anything Britain had ever seen. The South Sea Bubble, as it would come to be known, was a period of speculative mania that gripped the nation. Prices of South Sea Company shares soared to dizzying heights, driven by a combination of greed, speculation, and the belief that the company's success was inevitable. But as with all bubbles, the euphoria was short-lived. The bubble burst, leading to a financial crisis that left many investors ruined and the nation reeling from the shock. The South Sea Company's grand ambitions had turned into a cautionary tale of the dangers of unchecked speculation and the perils of chasing easy wealth. Word of the South Sea Company's potential spread like wildfire through British society. The company, which had been granted a monopoly to trade in the South Seas, was seen as a golden opportunity. People from all walks of life, from the wealthy elite to the common folk, were abuzz with excitement. The promise of untold riches and the allure of exotic ventures captivated the imagination of the nation. Stories of early investors making fortunes fueled the public's imagination. Tales of individuals who had turned modest investments into vast sums of money spread like wildfire. These success stories were often exaggerated, but they served to stoke the fires of speculation. People began to believe that they too could achieve such wealth, and the desire to get rich quickly took hold. And speculation became rampant. The stock market became a frenzy of activity, with people eagerly buying shares in the South Sea Company. The excitement was palpable, and the atmosphere was charged with anticipation. Investors, both seasoned and novice, flocked to the market, hoping to cash in on the booming stock prices. People were no longer buying shares in the company based on its actual trading activities or profits. Instead, they were driven by the rising stock prices and the hope of selling for a quick profit. The fundamentals of the company were largely ignored, and the focus was solely on the potential for rapid gains. This speculative behavior created a volatile market where prices could soar or plummet in an instant. Instead, they were buying simply because the price was going up and they hoped to sell for a quick profit. This created a self-perpetuating cycle where rising prices attracted more buyers, which in turn drove prices even higher. The market was caught in a feedback loop, with each new wave of investors pushing the prices to new heights. The optimism was infectious, and few stopped to consider the risks involved. This speculative frenzy created a feedback loop. As more people bought shares, the price rose even higher, attracting even more investors. The market seemed unstoppable, and the sense of euphoria was overwhelming. People were convinced that the good times would never end, and that the South Sea Company was a sure bet for continued success. As more people bought shares, the price rose even higher, attracting even more investors. The cycle of speculation fed on itself, creating an ever-growing bubble. The stock exchange was a hive of activity, with traders shouting out prices and making deals at a frenetic pace. The excitement was contagious, and the market was flooded with new money. People mortgaged their homes, spent their life savings, and even borrowed heavily to buy shares in the company. The lure of quick riches was too strong to resist, and many were willing to risk everything for a chance at fortune. Families were torn apart by the financial strain, and the pressure to succeed was immense. The stakes were high, and the consequences of failure were devastating. The allure of quick riches had clouded their judgment. Rational thinking was cast aside in favor of the promise of easy money. People ignored the warning signs and the voices of caution, choosing instead to believe in the dream of wealth. The fear of missing out drove many to make reckless decisions, and the market was filled with nervous energy. Few stopped to question the true value of the company or the sustainability of its soaring stock price. The focus was on the short-term gains, and the long-term viability of the company was an afterthought. Investors were caught up in the hype, and the reality of the situation was obscured by the promise of profit. The market was a house of cards, built on speculation and hope. The South Sea Company, eager to capitalize on this frenzy, engaged in aggressive marketing tactics. They published glowing reports and promotional materials, painting a rosy picture of their prospects. The company's directors were skilled at spinning a narrative of success, and they used every tool at their disposal to keep the momentum going. The public was bombarded with messages of prosperity, and the hype machine was in full swing. They published exaggerated reports of their successes in South America, further inflating the bubble. The tales of vast riches and untapped markets were enticing, and they fueled the speculative fire. Investors were eager to believe in the dream, and the company's reports were taken at face value. The reality of the situation was far less glamorous, but the illusion of success was powerful. The company's directors, many of whom were well-connected politicians, used their influence to promote the stock and downplay any doubts. Their connections gave them an air of credibility, and their endorsements carried weight. The public trusted these figures, and their reassurances helped to keep the bubble inflated. The lines between business and politics were blurred, and the interests of the few were placed above the well-being of the many. As the frenzy reached its peak, even prominent intellectuals and cultural figures got caught up in the mania. The stock market became a topic of conversation in salons and coffee houses, and everyone wanted to be a part of the action. The allure of wealth was universal, and the promise of easy money was irresistible. The bubble had permeated every level of society, and the excitement was palpable. Writers penned poems praising the company, and artists depicted its success in their works. The South Sea Company became a symbol of prosperity and ambition, and its story was immortalized in art and literature. The cultural impact of the bubble was profound, and its influence could be seen in every aspect of society. The dream of wealth had captured the imagination of the nation, and the South Sea Company was at the heart of it all. The South Sea bubble had become a national obsession, blinding many to the warning signs that were starting to appear. The market was overheated, and the cracks were beginning to show, but the euphoria was too strong, and the warnings were drowned out by the noise of speculation. The bubble was destined to burst, but for now, the dream of wealth continued to captivate the nation.